Welcome to the Kentucky Retirement System's presentation of Compliance Within the Monthly Report. This video will review and explain the statutory compliance associated with the information provided on the monthly report in the Employee Detail Record. The employer should be submitting a detail record through the Enter Report Detail or Upload Detail File process for each of their employees, with a few exceptions. Those exceptions include approved independent contractors, approved retired police officers, participants in another state-administered retirement program, volunteers paid less than nominal fees, employees who rejected participation upon initial agency participation in KRS, newly elected mayor or city council members who reject participation, and members of the agency's governing board. The detail record the employer is submitting contains approximately 50 fields of information per employee. The information on the detail record is what Kentucky Retirement Systems uses to create and administer a retirement account for each employee and to verify that the reporting employer is in compliance with statutory requirements. The contribution group is one of the first pieces of information that have statutory requirements regarding which group is selected for the employee. There are 5 contribution groups an employee may be eligible to participate in. The without health insurance, with health insurance, and cash balance contribution groups are for employees who are hired into a full-time, part-time, or intermittent position who work the required hours to be defined as participating. These 3 contribution groups coincide with the 3 benefit tiers of our membership. Tier 1 are employees who began participating in any state-administered retirement program before September 1st, 2008, and these employees are known for reporting purposes as without health insurance or HICON. Employers should be withholding employee contributions of 5% for the non-haz positions and 8% for the hazardous duty positions. Tier 2 are employees who began participating in any state-administered retirement program between September 1st, 2008 and December 31st, 2013, and these employees are known for reporting purposes as with health insurance or HICON. Employers should withhold an additional 1% on top of the 5% non-hazardous and 8% hazardous employee contribution. Tier 3 are employees who began participating in any state-administered retirement program on or after January 1st, 2014, and these employees are known for reporting purposes as cash balance. Employers should hold an additional 1% on top of the 5% non-hazardous and 8% hazardous employee contributions, exactly like Tier 2 employees. The retired reemployed contribution group should be used on a Kentucky Retirement Systems retiree who is hired back after retirement into a participating full-time, part-time, or intermittent position status. The non-participating contribution group is for employees hired into a part-time or intermittent position that do not work the required hours per statute to participate, or who are hired into a position status that is non-participating per statute, regardless whether this is a new employee or a returning retiree. The position status an employee is hired into can help in determining which contribution group they should be reported for. A participating position status means the employee is working an average of 100 hours over a fiscal or calendar year for all employers except school boards. And for the boards of education, a participating position means the employee is working an average of 80 hours per month over the school year. Employers must report retirement contributions on employees who are working in a participating position status. A non-participating position status can mean either the employee is not working the 100-hour or 80-hour average, or that the employee was hired into a position that is non-participating per statute. For employees hired into one of these position statuses, while the employer does not withhold retirement contributions, the employee should still be on the monthly report. The participating position status can be used for employees hired as regular full-time, part-time, intermittent, and regular full-time less than 12 months, which means the employee works less than 12 months a year but gets paid over the 12-month period. The regular full-time less than 12-month status should only be used by state or county employers whose employees meet the payroll criteria, excluding boards of education employees. Part-time and intermittent positions can be reported under the non-participating status also, but only if the position is working less than the 100 or 80-hour average. The remaining position statuses are non-participating according to statute, and they are available to be reported as non-participating for a limited number of months. We do not review hours on these positions. A seasonal position is reportable for a limit of 9 months. This position is renewable, but only if there is a 3-month break in service before the employee returns to the new seasonal period. A temporary position is reportable for a limit of 12 posting months for the CERS system and a limit of 9 posting months for the KRS system, and this position status is non-renewable. The interim position status is only reportable for the KERS employer's use and has a limit of 9 posting months. The emergency position status is reportable for a limit of 30 days. The probationary position status is available to CERS agencies only and has a limit of 12 posting months. However, this position status is administered based on the employer's probationary policy, which may be less than the statutory limit and which should be provided to the Kentucky retirement systems. In regards to independent contractors, prior to hiring, please send a copy of the contract to the KRS Legal Department for review. Failure to do so may cause a later billing for the contributions on the person filling the position. The salary the employer reports on the employee for each posting month is what determines the contribution amounts due for the participating position statuses. The employee contribution, or EECON, and the health insurance contribution, or HICON, are set by law and do not fluctuate, whereas the employer contribution, or ERCON, changes every July 1st. But the reported salary does much more than just determine the contribution amounts. Salary reported by the employer on employees within Tier 1 and 2 is used when the member retires as part of the formula to calculate their retirement benefits. The reported salary is also used in calculating the purchase price of employee service purchase costs. Reportable salary is defined in the Kentucky Revised Statutes as credible compensation, which is the salary, wages, tips, and fees, which are includable on the member's federal Form W-2 wage and tax statement under the heading Wages, Tips, and Other Compensation. But salary is not just limited to this type of payment. Salary is also any lump sum payment for compensatory time to Tier 1 employees, bonus payments, severance payments, settlement agreements, and qualified transportation fringe. Before reporting a bonus payment, severance payment, or settlement agreement on the monthly report, please contact the ERCE division for assistance, as these payments may need to be reviewed before being reported to determine how they are applied to the member's account for compliance purposes. The employer may make other payments to their employees, which, according to statute, should not be reported to the Kentucky retirement systems as salary. Those payments include lump sum payments for accrued annual or vacation time, lump sum payments for accrued sick leave if the agency does not participate in the alternate sick leave program, training incentive payments for elected city officers, living allowances or expense reimbursements, lump sum compensatory payments for Tier 2 and 3 employees, and nominal fees paid to a volunteer. In regards to the lump sum annual or vacation payouts and sick leave payouts, if the employee takes vacation time or sick time in place of a workday, that needs to be reported as salary. It is the lump sum payment of accrued time that fall under the non-reportable category, whether it's paid during the year or at the employee's termination. If any of these payments have been reported to the Kentucky retirement systems in the past, please contact your ERCE representative or the employer hotline for assistance. Associated with the salary is the payment reason that it is reported as. Each employee should have one record on the monthly report for their regular wages, and some employees may have a second line for additional wages that need to be reported separately. On the primary salary line, the employer has the option to label the payment as regular pay, which is the employee's normal salary, regular pay with additional credible compensation, which would be the employee's salary plus additional wages that are approved as credible compensation, like overtime, probationary period completion, which can be used on the last posting month of the member's probationary period, but please remember to also include an end date and end reason on the record. Leave without pay is used when the employee receives less than normal salary for the posting month due to a leave. This salary can be as low as $0 for the posting month for as long as a person is on leave without pay. This payment reason lets Kentucky Retirement Systems know the person is not receiving a salary, but they are still actively employed with the agency. Furlough and layoff are used for the same purpose as leave without pay to report an employee who is receiving less than normal salary due to a furlough or layoff, but who has not been terminated. The summer month payment reason should be used by boards of education, universities, and county agencies who employ personnel who work within the school system, and should only be used between the months of May to August to represent the months the employee is out for summer break. The job position title is another piece of information used by the Kentucky Retirement Systems to maintain the accuracy of the employee's retirement account. Most non-hazardous employees will be reported with the position title of Other, but there are some exceptions who need to be specifically identified for the Kentucky Retirement Systems, and they may have special issues surrounding their participation. For the position of mayor and city council member, these are the only employees of active agencies allowed to elect or reject participation upon initial election if they meet the definition of full-time according to statute. For the magistrate position, the reporting official for the fiscal court will make the determination if the employee in this position is participating or non-participating on a person-to-person basis. The coroner position title should be used on the primary elected coroner only, as statute allows this position to participate with the Kentucky Retirement Systems regardless of the number of hours worked. The deputy coroner must still average the required 100 hours per month to be eligible for participation, so that position should be reported with the title of Other. For county attorney employees, upon hire, the county attorney provides verification of the system the employee will be participating in based on the primary job duties of their position. Master commissioners are eligible to participate if they meet the 100-hour average requirement, but the master commissioner does not pay the employer contributions for the position, so the employer paid ERCON field needs to show no on all reported master commissioners. The volunteer firefighter position should only be reported to Kentucky Retirement Systems by the City of Okolona. The non-hazardous public safety officers are positions that may qualify for special treatment under IRS regulations at time of retirement if the employee is a non-hazardous jail employee, a non-hazardous sheriff employee who provides police protection, a non-hazardous police employee who provides police protection, a non-hazardous fire employee who provides firefighting services, or a non-hazardous EMS employee who provides emergency medical services. In regards to the hazardous duty position titles, if an agency has been approved by the Kentucky Retirement Systems Board of Trustees for hazardous duty coverage, then the employer has additional position titles to select for the employees who are filling those positions. If an employer is unsure what titles their agency has been approved for, they may get a listing from their ERCE representative. The employment dates provided on an employee's record reflect not only when the member was hired or terminated, but can also reflect changes to the member's account during their career. The Kentucky Retirement Systems expects a begin date to be reported when the member is hired or rehired with the agency. When reporting the employee for the first time, if the agency pays 2 weeks behind, please be aware that a record for the month of hire and a record for the month of payment should be submitted on the first report. An employment end date and end reason need to be submitted when an employee leaves their position with the agency due to termination, retirement, or death. When reporting an end date, always remember the end date must match the posting month that it is being reported in. So if the employee terminated April 30th, then instead of posting the wages paid after termination on the May posting month, the agency would have to add the wages and end date to the April record through the adjustment process. In addition to the date of hire and the date of termination, if an employee changes position status, position title for hazardous duty, or contribution group, an end date and reason needs to be reported for the prior status, title, or group, and an updated begin date needs to be provided for the new status, title, or group. This allows the Kentucky Retirement Systems to keep record of movement within an employee's career and helps us maintain the compliance on the employee's account. The rate of pay fields include information on the rate of pay, type of rate of pay, payroll frequency, hours per day, and estimated additional compensation. Please remember when an employee's rate of pay changes to update the rate of pay field on their monthly report record, as Kentucky Retirement Systems uses this information for averaging purposes and for cost calculation. The type of rate of pay should match the value in the rate of pay field. The agency has the option to report the rate of pay as an hourly amount, a monthly amount, or a yearly amount. Payroll frequency provides information whether the employer is a 24 pay or a 26 pay agency. The hours per day should be based on a weekly average, as our system is designed for most employees to assume they work a 5-day work week. If your employee works the 24-48 schedule, you may enter 24 for the hours per day, and the system recognizes the pattern and will average accordingly. The estimated additional compensation field is used by employers who report any incentive, special duty, longevity, clothing allowance, and educational incentive payments in addition to the employee's normal wages. This field must be utilized by employers who report CLEP pay or by boards of education who report a paraprofessional in place of including these additional rates of pay with the employee's normal rate of pay. This field should be reported as the annual amount of the additional compensation paid to the employee. The leave balance fields will only be used by employers who participate in a sick leave program with Kentucky Retirement Systems or who allow their employees to accrue compensatory time. On the sick leave balance information, please remember only Tier 1 and Tier 2 employees can have sick leave reported to the Kentucky Retirement Systems, and compensatory leave can only be reported on Tier 1 employees. This information is not a required field until the time that the employee terminates employment. Then the sick leave information is required, even if the hours or days accrued equal 0. If the agency participates in the standard sick leave program, they will provide the unused sick leave at termination based on hours. The alternate sick leave participants will provide 100% of the unused sick leave based on days on a secondary detail record separate from the regular salary with the payment reason of alternate sick leave. For both sick leave programs, the hours in a sick leave day should reflect how many hours constitute a sick day for that employee. The compensatory leave would need to be reported on a secondary detail record separate from the regular salary, with a payment reason of lump sum compensatory leave. And if this is being paid at termination, choose the option of at termination on the payment reason. The address provided on each employee is reviewed for validation by a service provided by the State Commonwealth Office of Technology as of January 1, 2018. If the employer would like to report the standardized USPS address on their employees' records, they can still access the Quick Links zip code finder tool on the USPS.com to find that information. Thank you for viewing the Kentucky Retirement System's presentation of the compliance of monthly reporting. Should you have any questions about this video or monthly reporting compliance questions, please contact our employer hotline to speak to an ERCE representative.